Everyone wants to grow their money, but most people have no idea how to invest it. Today, we're breaking down the 5 main types of investing, what they are, how they work, and which ones might fit you. By the end of this video, you'll finally understand what separates the rich from everyone else. It's not luck, it's strategy. Welcome to Investor's Edge. Let's get into it. First up, the stock market. When you invest in stocks, you're buying small ownership stakes in companies. If the company grows, so does your investment. There are 2 main ways to make money here: capital gains, meaning the stock price rises, and dividends, which are small payments companies share from their profits. But here's what beginners often miss. Not all stocks are created equal. There are blue-chip stocks like Apple or Microsoft, stable and reliable, and growth stocks like Tesla or startups that can skyrocket or crash. To keep it simple, most beginners start with index funds or ETFs, which bundle hundreds of companies into one investment. It's lower risk, easier to manage, and historically, the U.S. stock market averages around 7 to 10% annual returns over time. Remember this: don't try to time the market. Time in the market beats timing the market. Invest consistently, even small amounts, and let compound interest do its thing. Next, let's talk about real estate. When you invest in property, you're basically turning bricks and land into income. There are 3 main approaches. 1. Rental properties, buying a home or apartment and renting it out monthly. 2. Flipping houses, buying undervalued homes, fixing them up, and selling for profit. 3. REITs, real estate investment trusts. These are like mutual funds for real estate, so you can invest without owning physical property. The key advantage? Cash flow. Real estate can pay you every single month, plus grow in value over time. But it's not all sunshine. You'll deal with property taxes, repairs, and sometimes bad tenants. That's why many beginners start with REITs or fractional investing platforms. Low cost, no maintenance. Now, let's slow things down with bonds. A bond is basically a loan you give to a company or government. In return, they promise to pay you interest over time. Think of bonds as the steady paycheck of the investing world. Lower risk, lower reward. For example, U.S. Treasury bonds are considered almost risk-free because they're backed by the government. Most investors use bonds to balance risk. When stocks fall, bonds often hold steady. A common beginner rule is the 60-40 portfolio. 60% in stocks, 40% in bonds. A balanced mix for long-term growth and stability. Next, cryptocurrency. This is one of the newest and riskiest forms of investing, but also one of the most talked about. Crypto is built on blockchain technology, meaning it's decentralized. No banks, no middlemen. You can invest in coins like Bitcoin or Ethereum, or in projects that power Web3 and AI-based finance. Here's the truth. Yes, some investors became millionaires overnight, but many lost it all chasing hype. If you're new, treat crypto as a high-risk side investment, maybe 5% of your total portfolio. Always research the project, store your coins safely, and never invest money you can't afford to lose. Because while it's exciting, crypto is still the Wild West of finance. And finally, investing in yourself and your own business. This might not sound like investing, but it's one of the most powerful wealth builders. When you start a side hustle, an online store, or even a YouTube channel, you're investing in an asset you control. Unlike stocks or real estate, you decide how big it grows. Even small businesses can turn into financial freedom. Think of Warren Buffett. He started with one business investment that became an empire. Or YouTubers who built million-dollar brands from home. So never underestimate this kind of investing. It might not show up in a stock portfolio, but it can change your entire life. So let's recap. Stocks build long-term growth. Real estate creates cash flow. Bonds add safety. Crypto offers high-risk, high-reward opportunities. And business investing builds personal freedom. No matter where you start, the key is starting. Don't wait for the perfect time. That time is right now. If you learned something today, hit that like button, subscribe, and drop a comment telling me which type of investing you want to try first. This is Investor's Edge, helping you invest smarter every day. See you in the next video.